how do you see the price in oil falling affecting demand worldwide?
I think the oil prices came from $86 only a few weeks ago to around $70 today. I would say from a global economy point of view, this is a good news. It provided comfort to the markets, especially consumers around the world. And I hope that this situation, this comfortable situation, continues for some time to come, especially at a time when the global economic growth prospects are getting less and less optimistic. But when we look at a few years ahead from now, we see serious challenges coming in terms of oil markets. The demand, global oil demand, still grows significantly, but the supply, where will the supply come from, is a key question. When we look at the investment appetite today across the world for the conventional oil in Middle East, in Russia, Latin America, Africa, and elsewhere, to be honest with you, the investment appetite is very, very weak, and we cannot expect U.S. shale alone to fill the gap between the demand and the weak conventional projects. U.S. shale does an excellent job, but we can't expect everything from the shale.
Fatih Birol, if there is a supply cut of 1 million barrels a day in oil, what would that do to demand? What would it do to supply? And what would it actually do to the prices?
I think if the if the investment appetite remains so weak, which is about the current investment flows are 1/3 of the historical averages, very low, except for U.S. shale. And the U.S. shale, in order to avoid a supply crunch, needs to increase in the next 7 years more than 10 million barrels per day, which means U.S. shale needs to add one Russia, even more than that. So this is a tall order, and this, if it doesn't happen, this would push the prices up, which is, again, not a good news for anybody, for the consumers today, but also for the producers tomorrow. So therefore, the message is clear. In addition to the big growth coming from U.S. shale, we need the oil production growth coming from the conventional, from Middle East, Russia, Africa, and elsewhere. Therefore, investment, investment, and investment, very important today.
Dr. Birol, good morning. It is wonderful to speak to you. I see your world energy outlook. You know, you do the PowerPoint, the fancy IEA research and all that. All I want to know is, tearing a page out of Dr. El-Erian's language, is what is your unknown right now within the mix of policy, demand elasticity, supply mystery that's out there? What's the unknown for you?
I think there is a growing uncertainty and volatility in the oil markets. This makes the investors hesitating before putting their money for the new projects. For me, the greatest risk today we are facing is the investment appetite is very, very low. We cannot look at only today. We can't have a myopic view in the oil markets. We have to think a few years ahead in front of us. And what I see is that certainly there is a strong demand growth, but the unknown is, where will the supply come from? U.S. shale will grow strongly, but U.S. shale to expect to grow more than 10 million barrels per day, bring the markets above one single Russia, is a tall order. Can it happen? It can happen, but it will be a small miracle for me. Therefore, the biggest unknown is whether or not the investment for the conventional projects will come or not.
Fatih Birol, we remember our World War II history and the part that hydrocarbons played in bringing on that war, the demand for petroleum that we saw in the late 30s and the 1940s. I want you to speak now to countries like Australia that heavily demand imported oil. They don't have their own resources. How confident can an Australia be on a continuing supply of hydrocarbons?
So first of all, I should tell you that hydrocarbons are here today. They will be here tomorrow, and they will be even here the day after tomorrow. This is number one. Number two, the oil will be there, definitely for Australia, for other countries. But the question is, at which price? If it is very expensive, if it goes over the roof, it can provide avenues, new routes for the alternatives to oil. So it is very important also for the producers, exporters. Your colleagues talking from Abu Dhabi now, for them to know that the very high oil prices, they are not good news even for the exporters, as the consumers, importers will look for other options which may be expensive today, but in a very high oil price context, they may be profitable. So Australia and other countries will definitely find oil to buy, but the question is at which price. It is the reason why I underline this looming supply problem early 2020s as a lack of investments today in many countries around the world. US shale will grow very strongly, but US shale alone may not be able to solve the problems to keep the prices at a reasonable level.